What's going on, everybody? Welcome back to the Leveraging Real Estate Podcast. I am your host, as always, Ryan Corcoran, today with a very special guest in close proximity to me, about one state away, Shawn Winslow. How you doing, Shawn?
Great, Ryan. Thanks for having me, man. Pleasure to be on. And yeah, it's rare to, at least it seems to me, it's rare to find someone who's so close. Usually people are like South, Midwest, West Coast, but yeah, it's good to have a fellow Northeaster, New Englander to connect with.
Yeah, it's funny. A lot of people I hear, you invest in the Northeast? What about plowing? Like, how do you get around that? Like, it must be so expensive. You're not wrong. It's very expensive.
It's very expensive.
But yeah, man, great to have you on here. This should be fun. All right, so let's dig in a little bit. Who are you? Where are you from? And then let's get into why you chose real estate.
Yeah, man. So Shawn Winslow, I was born and raised in a small town in Vermont, and grew up with, family of entrepreneurs. My dad, my uncles, my grandfather, all entrepreneurs. So I was kind of brought up in that mindset. And I even, had the lemonade stands, did lawn care, did snow removal to what we were just talking about, all to make a little money. Because at one point I wanted a new mountain bike because, that's what we do up in the Northeast. A lot of outdoor activities. And my dad said, I'll split it with you, but you gotta pay the other half. And it was a very good lesson. And so what I did was like, all right, well, I've mowed my parents' lawn before. I know how to do that. I can make some money doing that. And then I've shoveled and snowblowed their driveway before, so I can, do that for several neighbors and surrounding properties. So I did that and bought the bike. And it was a good lesson in the sense of that. After I spent all that money, I was really kind of depressed about it. I was like, I had all this money, and now it's gone. And so it was a good lesson. But the funny thing that happens, Ryan, I don't know if you've seen this before too, but like we do all this work and we see the power of being an entrepreneur and creating our own money, and then having the power to do with it what we want. But then you're conditioned to do well in school, to go to a college, then do well in that college, and then get a nice W-2 job. And so that's what I did. I went to school for finance, moved to Boston to do that. Got a career in finance afterwards in Boston, and I was just doing the whole 9-to-5 W-2 golden handcuffs thing. And what got me to real estate is I love investing. I love helping people grow their wealth and their nest egg, right? And in traditional finance, to me, it felt like it was more the people like myself and people managing the money. They only really care about their wallet and not the investors, and that just didn't sit right with me. And after doing my own research, it's not the best way to grow wealth, because it's not tax efficient. There's a lot of fees and costs associated with it, and you don't really have the control over it. It's just a lot of like high level people that have the control, right? That own a lot of the company. They're making the decisions. They have a lot of leverage and power over the companies themselves that you're invested in. And I just didn't want any part of that, right? And then I decided, well, what do I want to do then to help people, and what type of life do I want? And I saw some of my friends, and then other older people that are successful, and people that I've, met throughout my life. And I was like, well, I like what they're doing. They have money, and they have a flexible calendar. And I was like, well, what do they all do? And it just so happened they all did real estate. So that's kind of how I took the plunge. And I'll let you interject here, and I can share where that's taken me, but that's kind of how I got into real estate.
Yeah, no, that's awesome, man. First of all, very similar. I had created like 5 or 6 houses where I was mowing and shoveling and stuff like that to generate some money in high school, just to pay for whatever, right? I mean, could have been just going to get a sub across the street. Is like either ask my parents for money, or I go mow this guy's lawn, make $40 and spend $10 on the sub. Right. So, I started doing the same thing, and I did the same thing though, right? I went to school, because that's what society tells you you're supposed to do. I went to college. I didn't even apply to my own colleges, dude. Literally my mom did it for me, because I was like, so like, all I do is play basketball. I don't care about school, blah, 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 right? Then I graduated with all this debt, got a master's degree, and now I don't even use it. I'm not saying I regret any of that stuff, but I totally get it, right? We're conditioned to follow that path.
Yeah.
But yeah, awesome. So, I mean, after the finance, after you realize that, okay, hey, real estate is the route you want to go because of the flexibility and the ability to generate a mass amount of income, and not only that, but I'm sure we can talk about it. It's scalable, right? So when you have a W-2 job, you're kind of stuck. You can increase your income little by little, but like maybe a couple percent every year. But you can't go from 100 to 300,000 or from 1 to 10 just overnight. Like you can as an entrepreneur. And I'm not saying that people do it overnight, but you have the ability to do that depending on how creative you want to be. So let's talk about after you figured out real estate was the path. What was next? Like what was the first step? What was that first property? The first taste of okay, I got this.
Yeah. So I was still in that mindset of educate yourself, right? Because that's we went to school, did the thing, and then got a job. So, and this was before, like there was still stuff online, but not like it is today, where you can just go on YouTube or find a podcast like yours, Ryan, and learn the ins and outs. That wasn't really there yet. So what I did is I read some books, obviously, but I asked people that were already in the business, like where I could learn. And so they all referred me to Boston University has this real estate finance program that's put on evenings for working professionals. And most of like the big private equity real estate firms in Boston send their employees there. So I was like, all right, I'm going to do that. So I paid my own way and did that. That was probably a 1.5-year program about. So I learned the ins and outs. I already had a finance background, so it made sense, and it was easy to kind of translate it. But I learned a ton. And the funny thing is, I met a guy that was in the program. He worked for a big syndicator out of Boston, and he was trying to leave syndications and go to private equity. And I was trying to just get into real estate. And I didn't know what syndications were at the time. Like I knew what it was from what we did, and we syndicated like private placements for certain debt funds. And so I knew it from that perspective, but I'd never heard of it from the real estate side. And so he told me what they did, and it was just funny because he was in this program to get out of that, and I learned about it in this program, and I was like, I want to do that. But I knew I couldn't just start from scratch. I needed to replace that income. Like
right.
That goes to the golden handcuffs thing, right? And I was licensed under FINRA, so I had my Series 7 and 66. So I couldn't even like raise capital for someone's deal because I was licensed. So conflict of interest, can't do that. I'm raising money for my firm at the time. So I just started buying smaller multis in New Hampshire, and I bought my first was as we say in the Northeast, 3-family, as others might call it, a triplex. So I bought that in Manchester, New Hampshire. That was my first deal. Bought it with a buddy, and then I really got the bug because you get those first rent checks, and you're like, ooh, I just need to scale this. If I had 10 of these, So then it went from there. And I knew the whole time I wanted to get in syndications because I just came from that like institutional background, and I saw the power of, the scalability of it all. 100 homes versus 100 units in one place. It just makes complete sense to go that way. From your listeners probably know, but just from so many different angles. From financing, you're going to get non-recourse, which is huge. Sometimes even better terms. Obviously, you're paying a maintenance, you're paying a leasing agent, you're paying a manager to be on site to manage that day in, day out. That's so powerful versus having 100 homes spread out all over the place. So just the scalability made sense. So what I did is I just kept buying and buying. So then I bought a duplex that I house hacked. Then I bought, and Ryan, this goes to the mindset too. Like it took me, from when I first started this, it took me probably like 4+ years to actually buy the first one. But then when I bought the first one, I bought the first one, and then I bought that duplex 2 months later, house hacked it. Then 3 to 4 months later, I bought another triplex. And then 4 months later, I bought another triplex from financing, from cash refi on the first one, bought that one. And then I bought a 14-unit portfolio from that one we just closed on. I just asked, like, hey, does the seller have any more? And he did. So then we bought 14, and then after that, I just scaled, and now we're at over, then I got into syndications after I'd replaced some of that, replace my, income, and then I could leave. And now we're at over 400 units and 519 student housing beds.
Whoa. 519 student housing across the country or just in the Northeast?
Yeah, and it's bigger facilities, right? So It's essentially like a multifamily just for students.
Gotcha. And you're raising capital for all these? This is just all syndications?
So yeah, so the first one was just me doing it myself up till about 25 units, and then the bigger stuff is all syndications, correct?
Okay, cool. So you started with triplex, then a duplex, then a couple triplexes, then 14. Why do you think? So why'd you start with the small units? Was that just because you had the money to do it, or was it because you could wrap your head around it, or why didn't you start bigger? I always find this question so interesting when I ask people because everyone has a different answer.
Couple angles, actually. A couple reasons why, actually. One, I did have the money, so I could do it myself. I think it was a limiting belief too, like a mindset thing. Just I didn't even consider I could go bigger right out of the gate, so I just went smaller. And then 3, because of my job, I in order to go bigger, you got to raise money, right? So I couldn't do it when I was still like licensed under FINRA, so I couldn't do it. I guess I could have just quit, gone cold turkey without any income coming in and tried to do it, but I took a risk, but not that big of a risk.
Okay, no, that's a good answer. I started very similar, right? 2 family, then a 3 family, then another 3 family, and so I just remember when I was doing it, I didn't even know that. Like, dude, I didn't even know what a 6 unit was. Like, I didn't even know you could buy a 6 unit or 10 unit or 12 unit. I was like, 2 family, perfect. Let's just do it, right? I had no rhyme or reason, no like scientific method or anything. Literally nothing. I just jumped right into a 2 family, and so. But I always look back and I say, like, man, like it was great. I learned a ton of stuff. I was super hands-on the first one. Learned how to be a landlord, manage, and collect rents, and it was a great experience. But like, what if I started with like a 25 unit or a 30 unit? And I just bypassed all that, right? And I just find it so interesting that I try always to tell people, think a little bit bigger, think a little bit bigger. But I don't know if I would change it, right? I mean, I don't know if I would actually change the start. So I'm curious, if you are giving somebody advice, do you recommend them to start off buying something small, or should they try to go bigger, or
Yeah, I go back and forth on that one because you and I obviously see the power of going bigger. It makes more sense, but one of the great things about starting small is you end up doing more of the everyday things that involve operating multifamily. So to me, it makes sense because then you learn that. So then when you get into the bigger stuff, you have staff that are doing those things. And if anyone's been in business before, any type of business, and I consider multifamily a business. Each property is its own business. And businesses run on 2 main things, people and process, right? And systems. And if you don't have those in place, I don't care how good you are, you're not going to be that successful. So you need those in place. And in order to lead people, you really need to know the ins and outs of the day-to-day tasks. And the only way, in my opinion, to do that in multifamily is to start smaller and do those things yourself. So when an employee is trying to pull something over your eyes, right? You know what needs to be done and what should be done. So honestly, I would probably recommend going smaller. Just don't stay smaller for too long.
Yeah. No, I love it. I think that I'm a huge believer that you need to do something and learn it, and then you can teach it. And so if you're trying to grow a business, well, you have 2 options. You can either learn it yourself, do it, learn it, mess up, then figure it out, and then you can start teaching somebody, and they can, or you can buy someone who knows what they're doing and stick them in place. And that's one way to bypass the starting small phase. But I still think having knowledge of how to do something is super valuable once you start to grow, level up and get into larger units. So yeah, it's good stuff, man. So all right, so how are you finding these deals? Like, I mean, I know some people do brokers, some are direct to seller, some have no game plan whatsoever. I mean, you guys are all over the country. I mean, being up in the Northeast, I see the attraction to go everywhere else.
Yeah.
But like, how do you find these deals? I mean, especially big ones when you're competing with a bunch of other, companies.
Yeah. So we were talking about this before, and like I like to call Ryan. I know he probably doesn't like the name, but I like to call him the king of direct to seller. He's a rock star at it, and I know he's putting out a course. I think he just put out a course, and I think anyone who wants to do that should take that course because Ryan obviously knows what he's doing, and he's cleaning house doing it. So we did not go that route. I did not go that route. I have done off market deals, but it's more been about networking in that sense. And then I've done the quasi off market that brokers call it, where they have it under contract, but they're not going to market it, and they
Yeah.
show it to some of their best guys. So I've done those. But yeah, so we do it through brokers, building broker relation. And the reason I did it is because that was my background in finance. You know, I was building, so I worked for, in that industry, it's called asset managers, but it's not the same as an asset manager in real estate. Asset managers is like, think of like a BlackRock, a Fidelity. You know, they're managing assets within their funds. So I worked for one of them, and my job, I was building, you know, relationships with, you know, brokers in that world where they're managing their clients' money. I was building relationships with them so they would use our product, our funds. And so I took that approach just because that was my background. And so I started building relationships with brokers throughout the country. And how I picked markets is it was twofold. One, I wanted it to be, since we live in the Northeast, you know, some of the hotter markets take a long time for us to get there. And I wanted to be able to fly to my properties in like 4 hours or less, or maybe even like 3.5 or less. So I looked at that only let me kind of do this part of the Southeast, right? So from like Boston down probably to Florida.
Yeah.
So then I started breaking down the market. I did like Florida. I started off looking at Florida, but everyone and their mother, especially institutional players, love it down there. So it made it tougher to kind of make deals work for us. So I ended up with Carolinas and Georgia as our target markets, plus, you know, Northeast for, you know, my personal portfolio. And so what I did is, there's a few ways you can do it, right, guys? You can get on LoopNet, you get on Crexy, see which brokers are listing properties, and then go subscribe to their email list and then start underwriting deals. You can look for the big brokerages in the market, so like the Marcus & Millichaps, the Cushman Wakefields, the JLLs, the Colliers, so on and so forth. And you can just search on their website to see what teams cover those regions. Then you can get on their list that way too. And what I ended up doing is I didn't want to waste my time. I wanted to know what brokers are doing the deals and what brokers are doing the type of deals that I wanted to buy. So what I did is I went through a lender who I'd built a relationship with, and he works for Berkadia, so they have access to their brokerage arm, which then has access to transactions within these markets. So they pulled a list for me in these markets that had all the multifamily transaction in the last 12 months and the brokers and brokerages that did those transactions. So then I sorted it by, I took volume divided by unit count, and based on the unit price, the price per door, I knew what type of vintage that was. And at the time, I wasn't going for Class A, so if it was a high price per door for that market, I'm like, nope, that's not my broker. And then I'd focus on the ones with the lower ones because we were doing B and C class. And then I would call an email. I had an email template lined up that had our overview, what we'd done. It was what we call a credibility kit. So it let them know, and it looked professional. Let them know, you know, what we do, who we are, and what we're looking for. And then I'd call. And if I'd get them, it would just be a conversation of like, you know. And brokers are similar to the brokers I dealt with in finance. Like, typically just like good dudes, you know, love talking about themselves and ladies, and talking sports, golf, skiing, all that. You know, the point is you really want to find out what they love and just let them talk about it. And that's how I've really built relationships. And then, you know, then I would actually go fly to the market and see them. And that is really what drove these relationships, because they. Like, I remember one time specifically, one broker asked me, like, what brought you to the market? You got like a wedding to go to or something? I'm like, no, man, I'm here to see you. And he's like, you flew all the way here to see me without, like, I didn't have a deal to show you? I'm like, yeah, man, I want to buy here. And that went a long way. And now they're going to pick up every time you call or every time you send an email? Definitely not, because they get that every day. And so what I've done to set myself apart if they don't pick up is I send in the mail a handwritten letter. So some of Ryan's secret sauce, I send a handwritten letter just introducing myself, and sometimes I'll send a Starbucks gift card and just be like, hey, coffee's on me, but next time it's on me, I'd love it to be in person, and then I'll leave my business card or my number. And when I do that, they always call back.
For sure. I would too.
Yeah. Right? Yeah. So, and it's about getting in front of them, because they're getting calls and emails all day, every day, right?
Yeah.
You got to set yourself apart, and that's what I've done, and that's... And because it's called getting on their like preferred list, right? Their short list. So anytime they do get their quasi off-market deal, they'll send it to you before they market it. And if it's good to you, you can just take it right there before it gets to market. And that's where you want to be with brokers. You don't really want to get the marketed stuff.
Yeah, absolutely. Dude, this has all been gold. If anybody's looking to figure out how to get in contact with a broker or build a relationship, rewind that, listen to the last 10 minutes. But no, it's funny because, I decided to go the direct-to-seller route, right? And so, we're talking about networking. I met a ridiculous amount of people through direct-to-seller, through direct mail, like so many of them. And it's great because you start building relationships. Everyone knows each other from somewhere. But the problem is that in direct-to-seller, you've got typically one deal, right? And so that seller usually has one deal. Maybe they have two properties. Maybe you can buy them both. Maybe you only buy one. But that's it, right? It's usually dead at that point. With a broker, if you buy one deal from a broker, you close the deal. It's a smooth transaction. You know that you're going to get tossed deal after deal after deal after deal for years to come, right? And so I really like this strategy. And the last year or so, I've really been, I've got the direct-to-seller thing down. I'm moving on that. But I'm really trying to build relationships with brokers. And so, in particular, I bought one deal from this guy, and he sent me 4 deals like almost every single month since then. And like I haven't bought any more because they're all garbage. But the point is, like, you get in front of them and you build their trust, and then they start kicking you deals. But I find it so challenging that when there's only a handful of brokers who are doing the majority of the deals, right? There's a ton of real estate agents, but there's only a few that are really doing the majority of them. And the good ones. Yeah, exactly. Yeah, like, okay, how many commercial agents do you know that know how to draw up an actual pro forma? I know like maybe one. The rest of them are all, it's a bunch of garbage, right? And so I really struggle with, trying to pierce the ones that are really crushing it and becoming friendly with them and building a relationship with them. So maybe I'll be flying to people pretty soon and bringing them Starbucks cards.
Do it, man.
That's awesome. All right, where do you see the business going from here? So you've got 500 student housing ish, and then 400 multifamily units. So what's next, and what does the future look like?
Yeah, man. So the goal was this year to double it, and we didn't quite do that. And I'm proud of that. Like, am I a little disappointed? Of course. But the reason I'm proud of it is because we really like to stick to our underwriting criteria. We don't like to buy an emotion just to get a door count or an AUM count. We want to buy great deals that have solid risk-adjusted, returns. And so that led to us, I never want to get in a bidding war, right? So we don't do that. So that's why we didn't hit the goal. But our goal is to get, next year 1,000 units, and then within the next 3 to 5, get to that 5,000 that unit mark. And I know people talk about units, and it's not units to me. It's just I want to create a certain amount of passive income for myself and my family. I want to create a certain amount of passive income for my partner and his family. And then I want to be able to give back to certain charities and nonprofits that mean a lot to me. And also I want to be able to grow my investors' net worth and grow their passive income by a certain amount. And I know that 5,000 number will let me do a lot of that. And then probably by the time I get that, I want to do even more. So that's kind of where I see us going. And I believe a lot of that will be buying units in the Southeast. I do have some strategic partnerships in Texas, so I could see us buying stuff there too.
Very interesting. I mean, it sounds like a lofty goal, but I mean, if you guys are already where you're at, I mean, dude, it's impressive, man. Listening to your story and watching you do this is pretty impressive. All right, how about raising money? So we're doing mostly syndications here, right? So do you have any tips for people who, all right, they've got maybe a couple smaller properties under the belt, they want to look into, maybe it's a 50 unit, 75 unit deal. Obviously, they don't have the $1 million or $2 million in cash to bring to the table. We need to raise some capital, right? Like most of us do. And so what's some tips on how to actually raise capital, how to get in front of investors, how to pitch this appropriately?
Yeah. So I look at 3 major groups or 3 major pools where you can raise capital from. The first is your retail investors. So that's just getting like a list of people. First, you start with obviously friends and family. And then you start networking, and that grows and grows. And then referrals, you have an email list, and then you can blast the deal out to your email list. That's kind of the traditional, and it really comes down to, like, I always think of anything in business, start with your lifestyle and what type of lifestyle you want, and then create your business around it, because these three pools I'm about to get into are really different types, will create a really different type of lifestyle. 'Cause if you're going to grow a huge email list, that's going to take a lot of marketing, a lot of attention. You're going to be doing all the investor relations. Obviously, you'll get to a point where you can hire that, but that's all on you, and that creates like a different type of machine, a bigger machine with a lot more gears that it's going to operate on with, right? So, but with the pros to that is you have a lot more control, because they're your investors. You know, you can make the decisions. You're not beholden to some big check writer that will make you sell because they hit their IRR number, right? So that's the first pool, and I can get more into like how I've built that. But then there's what I call strategic partners. That's the second one. So that's like if I brought Ryan into one of my deals, and obviously this got to be compliant with the SEC, but like Ryan has a list of investors, then he could bring his investors, invest in our deal too, and then we could pool both of our, you know, investor lists together to take down a deal. And that's a great way to do it as well. And that's a great way to start out as you're building your own individual list, so you can continue to do more deals, because obviously everyone only has so much bandwidth to invest. And if you have a list of 50 to 100, there's only so many deals you can do by yourself, right? And then the third pool is what I call institutional money. That's your private equity, your pref equity, your family offices. Then you can even you can even go up into like insurance companies will directly invest into your deals, pension funds, and that takes a different type of lifestyle, obviously, right? You're getting someone to write one check, and usually their minimum check is $5 million. So they're writing up $5 million, and they're going to get a lot of say in what happens, right? And so maybe they want to sell year 3 when you wanted to sell in year 5 to 7, but they hit their IRR number, and it's all about velocity of money for them. So they want to flip it and put it into the next deal. So that's a different type of lifestyle. Yeah, you don't have the stress of building and cultivating and managing this list and investor relations and worry about, am I going to be able to close this deal? Like, you don't have to worry about that because you have one big check writer. But the cons to it is they have a lot of power over you. And also one thing with them too that's a con and can be stressful is they can pull out last minute and decide not to do the deal, and then you got to scramble. So I don't know if that answered what you were looking for, but those are kind of the 3 buckets I look for, and I focus on my own list. That's my primary goal, but I have cultivated relationships with. And
so let's go with option number 1, right? I think that's probably the most feasible option for somebody when they're starting off, right? I mean, the first time I ever raised money, I went through my contacts on my phone. I sent a massive text message out to everybody, and I literally copy and pasted, and I said, "Hey, I have deals. If you have money, essentially, right? If you're interested in investing in me, let's do it, right?" And believe it or not, raised like $1 million from doing that, and a lot of those people continuously invest, whether it's 20 grand or 500 grand, right? But let's go back to that building that list. What are you saying to these individuals when you're trying to pitch these deals? Are you talking about the deal itself, or are you more talking like general, like how are you actually raising the money to do these? Yeah,
I never talk about the deal until it's like time to raise the actual, have the money move, right? It's all, again, it's back to building relationships. Like, that's what this whole business is about. Because you're going to get the person that might see this is a great deal and just fire you money without really building a relationship. That's great and all, but that's not going to be the majority of the people. It's about, they know Ryan, or do they like Ryan? Are they comfortable with Ryan? Do they trust Ryan? And once you get to that point, they trust you and know that you're only going to present them with good deals. So then it doesn't even really matter about showing them the deal. Obviously, they're going to look at it to do their due diligence, but it's more so. And the funny thing is, Ryan, it's actually the same with the institutional investors. They don't care about the deal. They tell you their buy box, but they want to make sure that they like Ryan and they trust Ryan. That it's all about relationship and emotions, whether it's with a retail investor or the institutional investor. So that's how I build my personal list. It's about building relationships with people. I like to align with people that want the same outcome, both in life and in their investments, because to my point earlier, when you're not aligned in that way, it just makes.
No, I'm so happy you just said that, man, because believe it or not, like 90% of the money I raise, they don't even care they don't care where the deal is, what the return. They don't care about any of that. They just care. They just know me, right? And they say, "Yeah, we trust you, man. Like, absolutely. What can I expect? Okay, this." And they don't even know. I have one partner who's invested like 4 or 5 times consistently each year. He has never even Google mapped what the property looks like. He has absolutely no idea, and he just doesn't care, right? Like, he just trusts me, and we have a good relationship. And the other thing I wanted to touch on, you said, it's all about like lifestyle, right? And so this might be a little bit drastic, but when I was looking to start, and I'm like, how do I get around people who have money, to raise more money? Okay, well, I can't be like just walking into Target and like just shop, grocery shopping and, playing Xbox, right? Like, it's not gonna work. So I was like, all right, what do I like to do that's expensive that I can do more of in the hopes that I can be around people who are wealthier and just, getting around people who are doing things that are bigger than me, right? And so for me, it was, mountain biking, cars, like, things that are expensive to get into, like, with, an expensive threshold just to get in there. But I'll be honest with you, a lot of those hobbies that I picked up have led me to a lot of different business opportunities. And so just something to throw out there, if you're looking to get around people who are, in a higher position than you, who have money, if looking to raise money, what are those people actually doing, and try to put yourself, get yourself in the room with those people. It doesn't always have to be, paying $10,000 to be a mastermind, right? It could literally be, joining a golf club, right? Go golfing on a Tuesday or something like that, right? Because most of the time, who's golfing on a Tuesday, right? Most people who have 9-to-5 jobs aren't golfing on a Tuesday. And so, just stuff like that. So I think, everything you've said so far has been absolute gold on the raising money.
Or buying a $200,000 Porsche and it's a business expense because you're going to a meetup, right, to meet people. But to your point, man, I know a guy that is a real estate investor, and he did very well for himself, so he's able to afford a nice car. And he went to, I don't even think he went to a meetup, but he was just driving it around. He went to, I don't know, he was somewhere, and someone came up to him and saw the car and asked him what he did, and he told him. And this guy happened to be super successful, and the guy invested like $10 million on his next deal. So, like, that's the power of like aligning your, like, just be authentic and be who you are. Like, if you love cars, you go to a car meet. You're going to meet people who also love cars, and you might also meet someone who has a lot of money, and they're going to like you because, you're being authentic, and you also like cars. They like cars, and they might want to do business with you. So I think that's a great point. And like, if you're a golfer, obviously go play a lot of golf, because a lot of wealthy people play golf. And to Ryan's point, if you're playing at like noon or like 2 in the afternoon, it's the people there are probably going to be wealthy too, because in Flexbooks they have the time and money to do that. So that's something I've done too, is like networking, going to certain meetups, car meetups, golfing. That's how you meet people. And it's always another thing too that's helped me too is always ask for referrals, or if it's someone who's invested with you, like, who do you know that I should know that I could help in the same way that I'm helping you and we're doing business together. And people, if you're doing a good job and getting them solid returns, they're more than happy to share it with their friends, and sometimes they might even share it just from a bragging perspective without you even asking. And then also another thing I like to do is, even if the person may not be in the position or comfortable investing with you at the moment, but this person, you built a relationship with them, ask them if they know someone that, might want to invest. And sometimes I'll actually, even before I ask the individual I'm talking to if they want to invest, I will actually ask if they know anyone. And the funny thing that happens is it's like that FOMO thing. They're like, wait, why aren't you asking me? I want to invest. And so then they self-select. But the power of it is like, I'm not asking you, so you're not like maybe put off by it. It's like, he didn't ask, why didn't he ask me?
Yeah,
now
it's
I want
like
to
a
invest.
little
It's just
Jedi
funny
mind
how
trick.
that,
But it does work. I've done the same thing, right? I mean, I told my uncle, hey, I'm looking to raise money. Are you interested, or do you know anybody interested? And what's funny is that he led me to, somebody that I had never met before, who's invested over $1 million in the last couple of years, right? It's just like, it's so simple though. Like, it's a text message, right?
That's amazing.
Really what I'm hearing you say ultimately is just, you got to become a master networker. Like, you just have to, don't be afraid to talk to people. Just be out there, be authentic, tell everybody what you're doing, and eventually, things start, opportunities start coming your way. Yeah, man, go ahead.
Yeah, and And if you don't mind me adding one thing too, like a lot of people ask like, well, when I'm starting out, like, yeah, I can build a relationship, but then how do people trust me if I don't have a track record? And obviously that's a solid question. And there's a few ways to go about it. One, it's, you just be frank with a person and say like, I don't have a track record, but if you trust me, like I've done my due diligence, I've done my research, and there'll be people that'll believe in you and they'll go in with you, to Ryan's point. And there's a second way of doing it, is aligning yourself with someone who does have the track record and that also is aligned with you. And then you can leverage their track record and present it to your investor. And yeah, you're gonna have to partner with them in the beginning and you might not make as much.
Absolutely.
Hey, as long as you're in the game, you're in the game.
Right there. Okay, I've been raising money since the first deal I ever did. And what's funny is that, so we touched on a little bit before, the first deal that I ever found, my uncle lent me $110,000. And so I hear, a lot of people will be like, oh, well, you're lucky you had your uncle to be in that position. 100%, I am super grateful to have had him in that position. But since then, he's been such a minor portion of where I've been able to go. And it's
right.
The second deal I raised, I brought a partner in who had 50 units already. And so I could not go buy a 10-unit building and raise the money. Or at least I thought I couldn't, right? So I brought, like you said, somebody who had experience in doing this to the meeting with me. I didn't even have to say that much. Mike and this guy talked for a long time. Next thing you know, we had a $200,000 check deployed into a 10-unit property. And I literally didn't do anything but initiate that conversation. Now that one investor who we raised money from because of my partner's experience now just invests in deals that I do without my partner involved. And so it's very simple, it's super simple to start raising money and networking like that. But you just got to be a little bit creative, right? I mean, it's not like, oh, I don't know anybody with money, I guess I can't do real estate. Like, no, like, okay, who do you know? Who do you know that's doing real estate? Pick their brain. And the other thing I want to say is that if you start really working hard at something, people notice, right? So even if you don't own property, right? But you're reading books, you've read 20 books, you're studying on it, you're out there looking at properties, you're telling people about it, people are going to catch on and see that, wow, like, he's actually working his ass off. Like if, whenever this deal comes along, I'm going to trust him because I've seen him putting in the hours, right? He's putting in his 10,000 hours. And so just stuff like that, and it's like that with finding deals too, right? You just keep bombarding a broker over and over and over. Eventually they're going to be like, all right, screw this guy, I'm getting on the phone with him, right?
Break him down.
Yeah, man, this has been awesome. I don't want to keep you too long, but if you have one actionable step that a listener can take here today in starting to build a portfolio with syndication without having done it before, what's that? What's like an actionable step they can take today?
Yeah, just get out and start talking to people. Talk to people in the industry. Just talk to anyone, because what I've come to realize is you never know who knows who's connected to what. You might go to like your uncle and you might not think he knows anything about real estate, but then you start talking to him and you realize one of his best buddies from college who he's still in contact with is a broker in X market that you like. You never know. Just talk to anybody and everybody about what you do. To Ryan's point also, is if you're just telling people what you do, they're seeing that action you're taking, and you're going to have people self-select or that want to see you win. So get over because I had the limiting beliefs, I had the fear. Just get over it. And Ryan, to that person that said like, oh, it must be lucky that you had an uncle, that's just someone that has fear themselves to step out of the box, and that's why they're trying to use that as an excuse to you. So the first actionable step is just get out there, talk to anyone you can about it. Try to, like, mentors are so powerful, and whether it's a traditional mentor or a paid mentor or whatever, get out there and try to find someone who's doing what you want to do, who's living the type of life that you want to do. Introduce yourself to them and come from a place of value. And I know everyone throws that term around a lot, but that's really true. Like, don't just go from a take perspective of like, hey, can I get coffee or lunch and pick your brain? Please don't do that. That doesn't work. That's take. Give, like, what can you do for them? Maybe you find a deal and you don't have the money or anything to take it down, and you give it to them. If you give them a deal or maybe an investor, that person's going to help you no matter what. And if they don't, then you don't want them as your mentor, but they're going to help you. And the power of a mentor is they can help you fast track stuff, and they can lead you in certain ways that are going to help you, limit the amount of mistakes that you could make. So that's what I would do. I wish I had a mentor. I have mentors now, but I wish I had one earlier on, because it just fast tracks everything. So that's
awesome, man.
That would be my advice.
The title of this show is going to be just talk to people. I think the underlying reason for success is just talk to people. Just get out of your room and start talking to people. Now, this has been awesome, man. I really appreciate your time, and I the audience is going to get a ton of value in multifamily, syndicating, raising money, talking to people, everything. This has been awesome. I really appreciate you coming on here. No, man, I appreciate you having me on. All right, sounds good, man. And let's do a deal together, buddy.